All right, everyone. Thank you for joining me for this month, September's masterclass. Today, we have a very special speaker, Sara Finn. She is a financial and certified health coach and retired CPA. Sara Finn is an expert financial and certified health coach and retired CPA who spent over a decade as an accountant in the corporate world and a decade running her own health coaching practice. Now she blends her accounting background and her entrepreneurial experience to help other solopreneurs manage and master their business finances with ease. Through her private coaching program, workshops, and her signature course, Easy Business Bookkeeping, Sara keeps small business owners feeling confident managing their business finances so they can save time, stress less, and keep more of the money that they earn. When Sara isn't working with clients, you'll find her hanging out with friends and family or curling up with a good book in her Long Island, New York home. She loves to travel and see the world, and her favorite place to relax and recharge is at the beach. Thank you, Sara, for being our speaker today, and I'm really excited to have you. Yay, I see everyone clapping.
Thanks for having me.
Now the floor is all yours.
Okay, I'm going to share my screen because I put together a little presentation for today. So let me just pull that up. And I like to keep everything very interactive. So if there are any questions as we're going through, like Camille said, you can put them in the chat or you can raise your hand, but I will leave time also at the end for live questions. So I'm going to jump right in. So the topic for today is know your money, grow your business, setting your business up for financial success. So I'm going to talk about how you can go from confused to confident when it comes to your business finances and why knowing that information will help you to grow your business and take it to the level that you desire. Just a quick disclaimer, this isn't tax or legal advice. I'm providing you with information. However, I don't know your specific business situation. So if you have a specific tax or legal question, it's always a good idea to consult with a professional in your area. So you might be here today because you might know that you need to track your business finances. It's something you really should be doing. Maybe you're not doing it. Maybe you're doing a little bit. Maybe you're not really sure. You don't know where to start. Or you might feel unsure about how to manage your finances. Where do you even start? How do you keep more of the money that you're earning? Maybe it feels like, you have money coming in, but you don't know where it's going. And at the end of the day, you feel like there's nothing left. And you might want to feel more organized, more clear, and in true control and have real clarity about what to do to manage those finances, what's not necessary, and how to do it with ease. I'm just gonna, yeah. Oh, I'm hearing myself as an echo. I'm not really sure. Okay, it's better now. Okay, so I'm just gonna start by telling you just a little bit about who I am. So my name is Sara Finn. I have an accounting degree. I earned my CPA. I went to school for accounting, and then I graduated and spent about 10 years working in the corporate world. I worked as an assistant controller, financial analyst, and auditor. So worked with spreadsheets and numbers for years and years and years. And when my first child was born, my daughter, she's 14 now, I went back to school and trained as a health coach. That was something I had been interested in doing for a really long time, and it felt like the right opportunity to do that. And so I did that at that time, and then opened my own health coaching practice where I worked as a health coach, having my own business for really almost 10 years. And so during that time, I worked with private clients. I had a detox program that I ran, a whole foods-based detox several times a year for a few years. I managed a very large Facebook group. And so I worked in that capacity for about 10 years when I discovered that so many of my clients or my colleagues and others in the wellness industry were struggling with the business side of their business, specifically the finances and financial management, and how do they, manage their finances and what do they do? And I wound up helping a lot of them with that side of their business. So helping them set up, systems and things like that. And I had some friends also who were chiropractors and therapists, and I wound up helping them. And I had it was kind of like a download one day, really out at a business conference, that I could put something together to help other wellness practitioners and soul-based entrepreneurs learn to manage their finances and know what they need to know easily. And so that's how my program, Easy Business Bookkeeping, was born. And I launched that, and it went very well. And I continued, doing that. And then at some point in time, it was too busy that I couldn't do both. And so I decided to put the health coaching aside and focus full time on the finance coaching. And that's kind of how I got to be where I am today in teaching this subject matter. Also, I'm married. I'm a mom of two. I mentioned my daughter before. I also have a son who's 12. My husband's also an accountant. So we've got a lot of financial knowledge between the two of us. And I'm super passionate about teaching small business owners, specifically coaches, wellness practitioners, and those of us who are working from, an aligned place and really looking to help people with and help the impact that we can make in the world. And I love helping and supporting those solopreneurs go from confused to confident and really to understand what they need to know when it comes to their finances. So that's a little bit about me. So now let's dive into the topic for today. So I'd love to know, if you want to put in the chat, on a scale of 1 to 10, how comfortable do you feel with the finances of your business? And no judgment. I love to know, just kind of how you're feeling. Christy says a 7, that's great. And if it's a 1 or a 2 on the lower side, that's totally okay. Sunny says 5. Finances is one of those things, if you're not taught what to do, it's something that you don't just learn kind of from osmosis, right? You have to be kind of instructed. And so I find that many people feel uncertain about it, or they feel like they're not a numbers person, or they're not, they're not good at math. And I want to tell you that you don't need to be a financial expert in order to understand the basics of your business finances. And so I really want you to know that if you're feeling unsure. Adrienne says 7, great. So we've got numbers all over the place, but everybody looks like they're feeling good. So when you know exactly what to do and have a system in place, you really can take control of your finances in minutes a week, even if you aren't a numbers person. I'm going to go through my 3 top tips that you can implement right away to help with the clarity around your business finances. And before I begin, I just want to be clear. What I'm talking about today is what you can do to get comfortable on your own with your finances, as opposed to outsourcing. So outsourcing your finances, hiring a bookkeeper and accountant, can be a great step for those of you who are at that place in your business, whether it's monetarily or the volume of what you have going on. But I feel really strongly that before you outsource, and even once you do, you really want to keep a pulse on your finances so that you know always what's going on and how to get the information that you need, and that you're not relying 100% on that other person. So if you are outsourcing and you have someone, hopefully, that you love, make sure you have ongoing communication with them, meetings and whatnot, so that you know always what your finances are. Okay, that was a little side note. So back to what you can do right away to get more clarity and more control over your finances. The first thing is to keep business and personal transactions separate. So many of my clients come to me and they have one bank account where they have their business account, their business transactions, and their personal transactions either on the same credit card or same bank account or whatever. But I recommend keeping your business accounts separate because, well, for a variety of reasons, but this helps you to create the energy that your business is a business, and it gives you a path to set you up for success and for clarity. And that way you have all your business information in one place. And now, if you're new to business and you haven't yet set up an LLC or a separate business entity, you can still put this into practice by opening a separate personal account and just using it for your business transactions. There's an online program that I like, or an online company called Novo, which is an online bank, basically, which you do need your EIN number, your employee identification number, to set one up there. But that's another easy way to separate out your business accounts. So I recommend opening a bank account, like I mentioned, for strictly your business transactions. So don't commingle the personal transactions there. That way you have a dedicated place to see everything that's going on in your business. So this will allow you ease in tracking your finances. So if you have one account in one place to look for that financial information, it's going to be much easier to go through it when you're putting it into your tracking tool, or whether you need to look through it for something. So it'll save you time, and also you'll have more clarity around it. And so if you need, for whatever reason, to support something on your tax return to the IRS, for example, you'll have an easier time finding what you need because you know exactly where to look. So as I mentioned before, separating out your bank, your personal and business accounts will help you signal that you're taking your business seriously, especially if you're just starting out and your business is a side hustle, or maybe it's something you're doing on the side part-time. It's a really great way to kind of get that energy off to a good start. Christy said she recently heard of Novo. Yeah, I've been testing it out for a while. It's actually really good if you're looking for something to use. So I recommend. Okay, any questions on tip number 1? Separating out your business, personal transactions, opening a business bank account, anything like that. Okay. If you think of anything later, we can talk about that at the end. So tip number 2 is not to wait until the last minute to pull your financial information together. So another common challenge that my clients face, and when I talk to them, is that they wait until tax time to prepare their financial information when they need it for taxes. And so they don't have it throughout the year. They don't have the information they need throughout the year when they want to look at what's going on in their business from a financial perspective. And they're stressing out because they leave it till the last minute, and then it feels like a really daunting task. So I recommend setting aside time regularly to track your business revenue and your expenses. And this can be once a month, this can be once a week. It really depends on the volume of your business, how busy you are, how many transactions you have, and that sort of thing. So I have clients that do it on a monthly basis. I have clients that do it on a weekly basis. But the most important thing is to make it a regular time in your calendar. It can be like a Finance Friday or a Money Monday or whatever feels right to you. And this will help save you time in the long run, because if you're tracking your finances a little bit at a time, when you get to the end of the year, the majority of it will be done. And so when you're preparing either to give your information to your tax accountant or to do your taxes yourself or whatever it is that you do, you'll have that information mostly ready, and you won't have to pull that all-nighter to do that. Paul says tip number 1 is a requirement and not just a tip. So if you're managing your numbers on an ongoing basis instead of at the last minute, it's also a good way to avoid making mistakes. So if you're waiting until the last minute, you're probably stressed, you're probably crammed for time, right? You're probably tired. So it's more likely that you'll miss something, or you'll make a mistake, or you'll make an error. So by doing it bit by bit, it really can help you to avoid those mistakes. And then I'll talk about deductions in the next tip, but you also want to make sure that you're taking advantage of all applicable deductions and accurately reporting your revenue. And so if you're tracking your financial information on an ongoing basis, then if a question comes up and you need to research something, or you're not sure about something, then you have time to do that, as opposed to just scrambling at the last minute and you just have to get it done and you really don't have that time to find out what you need to know. So another thing I hear from clients as well is that they don't like doing this process, right? Like they don't like sitting down with their financial information. I don't know how many of you might feel that way. If you do, you're not alone. So some of my suggestions for that is to find an accountability buddy. So if you know you want to go through your finances once a month, you have maybe a business bestie or a connection or a networking contact, someone that you can say, all right, this is the time and day we're going to do it. Let's either get together on Zoom or let's check in with each other over text or message or whatever, so that we can hold each other accountable for sitting down and actually doing this. And this can be, ideally you want to track your finances regularly, but if this is new to you and it's not something that you do on a regular basis, starting with just looking at your bank accounts, right? Looking at your business bank accounts and looking at the inflow, what's going in and coming out can be a great first step. And then over time, you can build on from that. Also make it fun. Put some music on, have some tea, something that will make it feel more cozy, more doable, and kind of less stressful and less scary. And I promise you that over time, it will begin to feel easier and more manageable. Well, thanks. Okay, so I recommend finding a system where you can categorize both your revenue and expenses clearly and easily. And so there are a lot of different ways to do this. There's programs out there that you can purchase, such as QuickBooks and things like that. I do find that many of those are difficult to use and require really an accountant. I've had clients that have use that and actually come and switch over to my program because they weren't able to get the information out of it. So they had someone set it up for them and teach them how to use it. And maybe they could put all their information in, but when they needed to access something, they didn't know how. They didn't know what reports to run or how to really extract what they needed. It's also very expensive, many of those systems. So the most important thing is to find a system that you're comfortable with, and that it can be a system like that if you're comfortable with that. It can be a series of spreadsheets you put together yourself. It could be something like my program, Easy Business Bookkeeping, which is somewhere in between. And I designed that because I found that there was kind of a hole between these fancy accounting software and something that you would put together yourself that might or might not check all the boxes. So finding a system that you're comfortable with is number one. Making a commitment to do it on a regular basis. So like I've been saying, find an accountability buddy, make it fun, make a point in your calendar to spend some time doing your finances regularly. And I promise that once you get used to it and you continue to do it, it will become easier and easier and really will only take you a few minutes each week. In my program, we have monthly money dates, and these money dates are times where we meet on Zoom, and they're a half an hour. And I've considered making them longer, but the feedback I'm constantly getting is that we're all up and running. All we need to do is come in and put our numbers in, and that's all we need. And so it really is true that once you get used to what you're doing and you know how to go in and enter information and get what you need out of it, it doesn't take very long. Okay, any questions about that? All right, so tip number 3, this is kind of the meatiest tip of all here, is learning about deductions so that you don't leave money on the table. So deductions, just in case anyone is new to this term, are expenses that are regular for your business that you incur that you can report on your tax return to decrease the amount of money you're paying tax on. So on your tax return, and if you're a sole proprietor or LLC, you're going to be, and in the US, you're going to be filing a Schedule C on your tax return. And Schedule C will ask for revenue, which is all the money that you've earned in your business from all sources. So revenue from clients, if you are, say you provide supplements for your clients and you have commissions from that or anything like that. So all the money that you earn in your business is considered your revenue. And then deductions are expenses that are related to your business that offset that revenue. And then the bottom line is what you wind up paying tax on. And so deductions are a legal way to decrease the amount of your tax liability. So paying taxes is a necessary part of running your business. Another thing I hear often is that, people hate paying taxes. Obviously, we don't want to give away part of your money, but I want to challenge you to shift your perspective on this. If you're paying money towards taxes, it means your business is making money, right? So that's a good thing. So try to reframe and look at it that way. If you need to pay taxes on your business is making money, and that's fantastic. But sometimes solopreneurs and small business owners are surprised by how much they have to pay, especially, as you're approaching that 6-figure mark, you may be required to pay quarterly taxes. And so that's basically when you pay taxes on a quarterly basis and spread them out over the year instead of paying them all at the end of the year. So these are things that you just want to keep in mind if you haven't encountered them already, as it relates to paying taxes. So I see there's something in the chat for me. Right. Christy says we get to pay taxes. It means that we're doing well in business. Exactly my point. So knowing what expenses can be taken as deductions is important because it decreases the amount of taxes you owe, and then therefore increases the amount of money that you get to keep in your business, which is always the goal. So I'm going to just run through a couple common deductions. Again, there are so many more and they're nuanced in some instances. So this is general information on some that I see for solopreneurs and small business owners that come up often. So the first one is advertising. And so this could be advertising expenses, either your website cost or your, if you do any print advertising, things like that. Anything that you're paying to advertise your business counts as a business deduction. The second I have listed here is general liability insurance. So as practitioners, everyone does have some sort of liability insurance, and any other business related insurance that is also taken as a deduction, can be taken as a deduction. And home office expense. So I like to mention this one because many of us are working from home, especially since COVID, many more people are working their businesses from home. And so there's a calculation that you can do where you can take a portion of your household expenses that apply to your home business and use them as a deduction to offset your revenue. So for example, this is my home office where I'm working. The calculation roughly, and obviously if you want to calculate it exactly, you can look at the detail or contact your tax professional, but generally speaking, you would take the square footage of your home office divided by the square footage of your total home, and then that percentage you can apply to rent or mortgage, utilities, things like that. So the expenses that you incur in your home. And so that can be taken as a deduction as well. If you have an office that you drive to and you're driving back and forth every day to your office that you're paying rent on, that's something different. That's technically a commuting cost, or a rental cost. It's different from the home office expense, but just want to point out that difference. And so the next one is office expense, which I like to put this one here too, just to differentiate it between home office expense and office expense. Office expense is like Post-its, paper, printer paper, anything that you're using in your office. And that can be taken, whether you have an office offsite or whether you have a home office, it doesn't matter. So it's just maybe basically supplies for your business. Paul is asking if bail money is deductible. Probably not. Okay, the other one is taxes and licenses. So any taxes or licenses you have, like business taxes, estimated tax, like I mentioned, if you do pay estimated tax at the end, that gets deducted off. So you're not like double paying. So that would count there. Business licenses, things like that related to your business. This next one comes up a lot: training, continuing education. So if you take training as it relates to your type of business, the service you provide, or even things like accounting training, bookkeeping training, marketing training, things like that, that can be taken as a continuing education or business deduction. So it's always good to keep track of that as well. And know that if you're buying a program like that, that you can keep in mind that you can take that as a deduction in most cases. And then the last one I have listed here, which is definitely not the last one in general, but for sake of time, I'm going to stop at this last one. It's vehicle expense or mileage expense. And so this is either one or the other. So if you have a business where you use a vehicle for your business, say you're, you have a painting business or something, and you're have a vehicle strictly for that, that's where you would take vehicle expense. Mileage expense is if you drive to and from clients, you can track the amount of miles that you that you're spending driving, track the miles that you're driving to and from the client sites. And then you can apply that to whatever the mileage percentage is for that tax year. And it changes every year. Last year, I think it was half the year, it was like 50 something cents. And then the other half of the year, it was 60 something cents. I don't know. They change it every year. But so you would apply the amount of miles you drove to that dollar or cents amount that they're allowing. And then the total would be what you can deduct as mileage expense. The important thing to note here is that you do want to keep track of your mileage, either in a log, a handwritten log, or in an app or something like that, because if you needed to go back and prove what the mileage was, how you came up with that number, you want to make sure you have the backup to support that. So yeah. And again, like I mentioned with the home office, if you're commuting to and from your office, that's not included in the mileage because that's considered a regular commuting expense. All right, before going to the next slide, I'm just going to check the chat again. Oh, you're welcome, Marissa. And membership fees. Yes, Camille, membership fees as well. It can also be deducted for networking groups and all those things as well. That is true. And a good one to mention, especially here. Any questions on these before I move on? Okay, so when you track your expenses, sort them into deduction categories. So if you're sitting down and you're looking at your expenses and you're saying, okay, this is this is that, track it into categories, and then you'll know going forward which categories each should be in. And so you're not recreating the wheel every time. Then you can look back on the prior month and say, okay, this is where this goes and this is where that goes. And then also you can be consistent year over year. So when you file your taxes, you know which ones fell into which categories. That will be consistent year over year on your tax return. Saving your receipts is important. We live in a pretty digital world right now. So if you have any receipts that come through email, which a lot of them do, my recommendation is to create folders within your email and then just move them into those folders as they come in. So for example, if you use MailChimp for your email service, they send an email when your card is charged. Take that receipt and just put it in the appropriate folder. You don't need to print out hard copies and save hard copies, but you do want to have a paper trail or an online paper trail in the event that you have to provide support and backup for those expenses in the unlikely event of an IRS audit or whatever it happens to be, if you need to look back for your own purposes, whatever. If you have paper receipts, I recommend, say you're taking a client out to lunch, write on the receipt what it is that you are there for, who was there, who was present, what the business reason was for, because you need to provide a business reason for all those types of expenses. And then save that receipt. You could use an electronic app, take a picture of it, file that away in your email, like I mentioned before. Whatever system works for you, just create a system to save those things so that you have them if you need them. One question I get often is, what about just using my credit card statement? Is that enough? And I recommend keeping also the additional support from whatever the company is that you're using, because if in the event you had to go back and the IRS said, okay, I see this line item on your credit card, but how do I know it was a business expense? You want to be able to go back and pull that actual receipt. And a lot of times you could go to the company website, log into your account, pull that information. So if you haven't been saving things, don't stress, but it will save you a lot of time if in real time, when you get those receipts and things, you just kind of plunk them in a folder, you'll have easy access to them as you go along. The meal receipts, the ink disappears after a couple of months. Yeah, I mean, for paper receipts, I just usually put them in a folder and then try not to touch. But in that case, if you're finding that happens a lot, just take a picture of it and save the electronic receipt. Camille says shoebox. Yeah, I have a folder, really. But yeah, same difference. But you can take a picture and then, you won't have to worry about the fading. Any other questions about that? I feel like I'm throwing a lot of information out there, but, I want to make sure everybody's clear. And I don't mean to scare people when I mention IRS audit, but I do know a few colleagues who have had that situation before. And because they had organized records, it was much, much easier and took a lot less time. And I can speak from the other side of it too, because I spent some time as an auditor, 3 years of my, my early career. And what they're looking for really is just support to back up the numbers you put on your tax return. So if you told them your deduction for meals and entertainment was X, they're going to want to know how you came to that number. That's really what they're looking for. So as long as you can provide backup and support as to where that number came from, you're good to go. Okay, so by implementing these small strategies and also paying regular attention to your finances, you'll be well on your way to feeling confident and empowered as it relates to the money in your business. So if you're not doing this yet, I would love for you to make the commitment to start today. I know you can do it. If you don't feel like you're good with numbers, if you don't feel like it's something you like, start slow and layer on what you need to do. And it will get easier and easier as the time goes on. Any questions? How are we on time? Christy says, grateful for these tips. I'm doing them to no wonder. Oh, awesome. Yes, exactly. Exactly. And you don't have to be an accountant. It doesn't have to be rocket science. You don't have to spend hours and hours a week doing this. But it's helpful to prioritize it. I'm going to stop my share.
I'll ask a question.
Yeah.
Sarah, just curious what your opinion is. I'm using or have been using, for the last 3 years, I've been in business, a simple like Excel spreadsheet, and I have added to it. So it has various like ways of tracking things. And so far this year, like on a month-to-month basis, I'm adding up, especially income and expenses. And I'm kind of on target. Like I'm double checking in a couple places and it seems like I haven't missed anything. So I'm proud that I'm like organized, but I'm not using any other system, just an Excel spreadsheet. Any thoughts on that?
Yeah. Yes. I have lots of thoughts on that. If the system is working for you, I think that's fine. So my system, Easy Business Bookkeeping, is a series of spreadsheets. So it's, they have lots of auto calculations and things like that to help you keep track, but it's spreadsheet based. So as long as you know that you're taking all your sources of income and you're looking at them each time, and you're taking all of your sources of expenses, so credit card, bank account, whatever, and that you're not missing anything, you should be fine. Yeah.
The one thing it's not doing, because I have worked, in a company where the CFO, just spent all day with crunching numbers. What I'm not doing is, like, I'm very aware of expenses in those categories, the income I'm getting, and knowing, the net, the gross, what I'm paying myself. But
Right.
it's the accounts that I have, because to be honest, not just a bank account, but I'm using like PayPal and Venmo,
Right.
which I count as additional accounts to keep track of.
Yep.
I'm not netting, I'm not I don't want to say zeroing out, but I'm not like reconciling it. That's the word. Completely, because I still do some personal expenses that I feel I want to cover through those accounts because they're personal to me.
Right.
So it's not reconciled, whatever that number way is, like completely.
Yes. My opinion on that is if you are a sole proprietor, an LLC, you're not a corporation, the way you're doing it is fine. A bank reconciliation is really like kind of a check and balance, to make sure checks are clearing, that you've got enough money in there, and that all of that. And if you were to outsource, they would probably do that for you just as part of their whole process. But the way that you're reporting as a sole proprietor, in my opinion, it's not necessary. One of the things I have on mine is I have a page where you can track distributions and inflows. So if you take money and transfer, you're paying yourself, right? You're transferring the money out once a month, just a place to kind of track that. So if you have something personal and you want to track it out there, you could do that as well. But I think the way you're doing it, as long as you know that you've looked at the PayPal, you've looked at the Stripe, you've looked at the bank account, and that you're not missing anything, I personally think that's perfectly fine.
Yeah, thank you. And I definitely do track what I now know is called the draw.
Yes.
Because I think that's important, not just to see the net and gross numbers, but also to see, that number, that's how it changes month to month or year to year.
Yeah, absolutely. And for, you mentioned paying yourself, and that's something I didn't put in the presentation today, but I talk about it a lot. Also, many small business owners, especially wellness practitioners and such, we leave the paying ourselves to last, and we just kind of pay ourselves whatever's left over. But like you said, which sounds like you're doing, and for the rest of you, taking an amount and paying yourself before anything else is a really great habit to get into. And I recommend picking a percentage that feels, doable, and that can always be changed. And then any revenue that you have, maybe on a monthly basis or more, depending on how your money goes, applying that percentage to whatever you're bringing in, and then putting that in, the paying you, whether you move it to another account or whatever. Novo has like a split you could do where you transfer something and it automatically like puts it in there, which is great. But I recommend getting in the habit of doing that, even if you're just starting out, so that way you can increase that over time, and you'll be paying yourself regularly and not leaving yourself for last. I think somebody wrote in here profit first. Yeah, Christy, profit first. So yes, that is roughly like what the profit first method is. And that is a great book. Although I have to say that sometimes it could be a little tricky the way he describes things, but what he's basically saying is you apply, a percentage to your income to pay yourself, to cover your expenses, to put into savings and whatnot. And every time you're bringing in money, you apply those percentages, and that's how you allocate the money that you're bringing in and make sure you're covering everything and paying yourself. And it helps you kind of not get sucked up in either spending too much, right, or covering expenses or buying more things than you need, and really prioritizing the kind of keeping of your income. So yeah, awesome.
May I ask something related to deductions?
Sure.
I think like for me, particularly, I spend a lot of money to get myself ready to build a business, but the income not necessarily flowing yet. My question is how much the deductions doesn't feel like I'm just take the advantage of system. For example, if I only earn like $1,000 by deductions of 10,000, is
Right.
that the ratio? Like they kind of raise the flag for?
Yeah, you want the deductions ideally to stay under your income. So if you are just starting out and your income is not exceeding your deductions, then I would not take things like, if there's a training or something like that. Like the regular business expenses are what you should prioritize, like the website costs and all of that. Because if you file your tax return with a loss, which would mean that your deductions are more than your income, over a few years, it can be a red flag. And so, yeah, I would recommend if you're just starting out or if your income's not that great yet, you don't need to take all of those deductions. So start with the ones that are more regular to your business and add in the other ones as you have income to cover it.
Okay, thank you.
You're welcome. Anyone else? These are great questions.
Sarah, one of the things, just I can't think of what it's called. Oh, depreciate, that's the word. My accountant used all of my startup costs and depreciated them. I don't know how
Right.
because it was so expensive in the beginning.
Right. Yes, I
appreciated them.
If you have
Those-
like large outflows of cash, like you're saying,
Yeah.
for large purchases, you can depreciate them, which basically means that you take the expense and you divide it over several years, right? So I'll use something like a computer, for example. If you purchase a computer, the life of that computer is maybe, I don't know, 5 years, I'm just saying. You would divide that expense over the 5 years and take the expense in those years. You certainly can do that. Most professionals that I work with don't have the startup costs that are enough to warrant doing that. But yes, you certainly can. And if you have questions about that, I would check with a tax preparer or an accountant to ask how to do those calculations so that you can apply that, spread it over the years. That answer your question? Yeah.
Yeah. Thank you.
Okay, thanks.
Right. Anyone else have any questions? All good?
Sarah, I just have a question. It really doesn't apply to me, but I'm just wondering for what Sunny had asked. So let's say I put my own money into a business. So it's sort of a loan to the business. Can I pay myself back, not as a salary, but kind of how would that work in the accounting?
Right. So that would be like Christy mentioned, the draw or
Oh, okay. I didn't know.
Yeah. What you're putting in. If you're, it also depends too on how you're filing. So if you're filing as a sole proprietor or LLC, you're filing on Schedule C of your tax return, and that kind of gets swept in to your personal and combined with your personal tax return. And so on paper, you know, you might be moving the money from your personal to your business and back again, but in the eyes of the IRS, it's the same. So it's good to track it for your own purposes, and you want to pay yourself back, you know, when you're ready. But in the eyes of the IRS, it's kind of all pulled together. So you don't need to list it on the tax return as any specific thing for that business filing. If you have a corporation or something different, not an LLC, but an actual corporation, you want to check on that just to make sure that this is for individual sole proprietor LLC filers.
Okay.
Can you give the same scenario for a C corporation?
I cannot for a C corporation because I don't know off the top of my head what the situation is specifically for that. Yeah. I don't want to give you information I don't have. So.
Anyone else? We have a few more minutes.
Well, anyone.
Just in case, you know, a lot of those resources, they say they can fund you, which means they might give you a lump sum money to your account. But that's money for us to invest, maybe paying some interest back to them. So how you catch those?
I'm sorry, I missed the beginning of what you said. Who?
Like, you know, something you can get to the pitch contest that you can win.
Right.
Some kind of lump sum sponsorship, right? The money. And so when they come in, we might have some kind of a payback program for it. So I think I believe we can deduct the interest, right? This is kind of just like the real estate, but what the earning and things like that. I mean, like on the bookkeeping, we need to put like a separate so we can see in and out and pay?
Yeah, so it's like a grant sort of,
Yes.
right, is what you're
Mhm.
saying? Yeah, so what
Yes.
you would want to do is you would want to track that based on the stipulations of the organization that's giving the money to you. Some of them want you to track exactly what you're spending it for.
Okay.
And so I recommend creating a separate schedule so that you can record how much they gave you, and then each time you spend it, exactly what you're spending it on, so that way you can provide to them where the money has gone.
Okay, so you kind of
So-
treat it like a different entity.
Yeah,
within your things. Yeah, okay.
right. You would still
Okay.
include it, so you would still include it in your bookkeeping, but I would also recommend keeping a separate schedule tracking that money so that you have that separately. But you still want to include the expenses and everything in what you're spending because it's still within your business.
Mhm.
But in addition to that, you want to track it separately so you have that
Okay, cool.
that flow.
Yeah, thank you.
Yeah. Paul said it's similar for a C Corp to answer the question from before. Okay, check with your, yeah, I would recommend checking with your accountant for sure.
Anyone else?
So if anyone else thinks of questions after they leave, you're welcome to contact me. I can put my information in the chat for those of you who don't know me. My email is sarah@sarafins.com and my website sarafins.com. And then on social, you can find me at Easy Business Bookkeeping on all platforms.
The question about your own program, the Easy Business Bookkeeping program. You talked about your spreadsheets. Do those spreadsheets come as part of a program that people can buy?
Yes, so the Easy Business Bookkeeping program, it includes templates and spreadsheets that are customizable to your business, but also tailored to mirror the Schedule C. So when you choose your deduction categories and you put everything in, it's like it allocates them for you and it's like plug and play. And so at the end of the day, you can print it, hand it to your tax preparer. I have many clients that file themselves, so they just use it to fill out their tax return. It also, it's a self-paced course, so you get the templates right away. There's video modules that explain to you how to use it, how to implement it right away. I think I mentioned we have money dates. So we have monthly calls where we hop on Zoom and I answer questions, and everyone kind of uses that as a, like a co-working session to get their information in the tool. There's also a private group, Facebook group, where you can ask questions. And yeah, so the program's designed to be, self-paced, but I also have an option where you can get one-on-one support from me and have sessions with me as well, if you want some help in kind of getting it set up. But it's designed to be very straightforward and easy to use and easy to implement, because I didn't want the technology to hold people back from getting that information that they needed and getting everything in there. So yes, so that program, I can put the information on
Definitely.
that as well.
For small business owners, before you give it off to an accountant, you should have the general idea of how to run your business.
Hi,
Exactly.
Sarah. I'm really curious because the question that I asked you before, it seemed like maybe C corporations aren't your arena. Can you see your program, your educational program, being useful to somebody who leads a C corporation?
Yes, it would be useful in that it will help you keep track of your financial information. The only difference would be is that tab that I have that puts everything in the Schedule C format may be a little different for you, depending on how the tax return is set up when you file for your C Corp. So that would be that might need a little bit of tweaking, which is something I certainly could help with. But that would be the main difference. But the tracking itself will show you not only for tax purposes, but it'll show you your revenue by month, your expenses by month, your expenses by type. There's a little P&L, profit and loss statement, showing you what, so you can look and see, is there a quarter where I'm making more money than other quarters? Is there a place where I need to maybe create a new program, or maybe I need an expense to incur an expense? Maybe I should wait till this quarter because that's the quarter where I launched this program, you know, that sort of information you can glean from having regular financial data at your fingertips. So
Okay, thank you so much.
you're welcome.
Fantastic. Just reading.
Thanks for being here, Sunny.
Thank you so much for donating your time to do this masterclass. It was fantastic.
You're
And
welcome.
great business basics for everyone out there. I would encourage you to reach out to Sara if you have any further questions after this. Check out her course. It sounds, just from running a business, it sounds like so easy to be like, oh my gosh, someone already created this spreadsheets. It sounds really wonderful. So thank you for your time. Thank you for showing up, and thank you everyone that also came and joined us today. And that's all I got.
Thanks, everyone.
Thank you.